Peloton reported quarterly financial results that sent the stock price soaring up 37% on the day of the announcement. I'll discuss why the share price is soaring, and I'll update my recommendation for Peloton stock. Of course, I'm happy about the stock jumping as much as it is because I've had Peloton stock rated as a buy. So those of you that followed that recommendation have made some good money today on the back of this news. I'll update that recommendation and let you know if it's worth keeping or if it's time to take profits in Peloton stock. Let's take a look.
I want to thank the Motley Fool for sponsoring this video. Visit fool.com/Parkev for the 10 best stocks to buy now.
So as I mentioned at the top of the video, Peloton stock price is soaring today on the back of this news, up 36.61%. One of the bigger reasons why Peloton's stock price had been so low to begin with is because of the risks of bankruptcy. The company's cash position was in danger because it was losing so much money on the bottom line. It had so much debt on the balance sheet, and the negative cash flow was putting the company in danger of having to go out of business. However, management saying that their turnaround efforts have now put the company in a stable financial foundation, and we can now focus on innovation in a more strategic way, enhancing our member experience and driving sustainable, profitable growth over the long term. So the big bulk of this share price pop out of Peloton is the decreasing of bankruptcy risk, the decreasing of the company's financial danger. It's now no longer in such an urgent financial position. It's no longer in a desperate financial position, which improves the overall value of the business because now it takes away that risk, and now the company is in a more negotiable position with lenders, and it can negotiate better terms, refinancing debt, extending terms, and so that's great news for Peloton stock investors. They also generated revenue growth for the first time since the second quarter of 2022, but it was up only 0.2%. The recurring subscription revenue stream continues to deliver low churn with a strong gross margin of 68% in Q4, which was up 100 basis points year over year. I highlighted that I've had Peloton stock rated as a buy, and one of the primary reasons I've had Peloton stock rated as a buy is because of the subscription side of the business. The hardware side of the business, the equipment side of the business had not been doing well, and I have not been optimistic about that side of the business. But they have a subscription business that generates strong profit margins and a very low churn rate. People don't cancel all that often. It's over 98% retention rate. So I figured all they had to do is cut their expenses in the hardware side of the business, don't produce as much, and focus more so on retaining those subscription customers, and the business could be on a more sustainable footing. That's easier said than done, but the company is working towards that goal. So the GAAP net loss in Q4 was 30 million, which was an improvement from negative 211 million year over year. And the net cash provided by operations was 33 million, an increase of 88 million year over year. So now the company's generating cash from operations. That puts it on a sustainable footing because every quarter cash is coming in, right? And you can use that cash to pay off debt, which will reduce the interest expense, which will increase the cash flow, increase the profitability. And so now you've got to a position where finally its financial foundation is sustainable, and that's causing the stock price jump. Still, they're not out of the woods yet. They're making significant progress towards right-sizing the cost structure, and they'll continue to optimize expenses. They made significant progress towards achieving the $200 million in savings in the plan they announced in May, and they achieved 15 million in savings this quarter alone. It remains on track to achieve this $200 million savings target by the end of fiscal year 2025. And one of the areas where they're cutting spending in the fourth quarter was on sales and marketing, which decreased by 19% year over year. Now, you may have heard me say this before, but it's more impressive that Peloton generated revenue growth in the second quarter, even though it was modest, just 0.2%, while also decreasing sales and marketing expenses by 19%. So they cut advertising, they cut promotions, and they still generated sales growth. That's impressive. That signifies organic demand for the company's products, and that's good news for Peloton stock investors. So in May, they successfully refinanced their balance sheet, decreasing their debt by about $200 million, and their average maturity has been extended to 2029. Now, this is a big deal for Peloton, decreasing debt by $200 million, because Peloton borrowed money at prohibitively high interest rates. They had to borrow money when they put themselves into this position of desperation, and they had to pay high interest rates to borrow that money. Now that they're in a better financial position, they can pay down some of that high interest debt and then refinance into lower cost debt because their financial position is less risky, so lenders would be willing to offer lower interest rates. Peloton is an unfortunate story because they caused this to themselves. This was a self-inflicted wound. They almost killed themselves with the decisions they made during the pandemic when gyms were still closed and demand for its exercise equipment was soaring. They made substantial investments in manufacturing expansions, and that bit them in the butt. And the company is now trying to recover from those mistakes made during the time when gyms were closed. When gyms reopened, demand for Peloton's exercise equipment collapsed, and so they had to recover from those investments, sell off some of those manufacturing investments, reduce inventories, reduce the quantity of units produced, and get themselves to a smaller size that's more appropriate to the current demand for its products. So in the fourth quarter, they launched the Bike Plus rental program in the UK, and early results have outperformed their expectations. The rental program will allow customers to get some of Peloton's equipment at a lower entry point, right? Because their equipment is expensive, upwards of $1,000. And so if you allow customers to rent instead of buying it, it will make your products more accessible to more customers. They're also initiating a one-time fee of $95 or 125 Canadian dollars for the US and Canadian customers that buy Peloton's equipment in the second-hand market when they buy it from someone else, not a Peloton provider. Connected fitness revenue from the treadmill portfolio grew 42% year over year in the fourth quarter. The treadmill portfolio is not as large as the bike portfolio, but it's growing much faster than the bike portfolio, and it was nice to see that they do have a growth driver here. Precor, which was a company they purchased during the boom times in the pandemic when demand was soaring and the company needed increasing manufacturing, Precor revenue jumped 20% year over year, driven by key product launches, including the fiscal year 2024 launch of the next generation cardio consoles. So it's nice to see that segment rising again and contributing to Peloton's success. Now, Peloton's stock price is trading at a forward price to sales of 0.574, which is still near the lowest level this stock has traded for, going all the way back to 2022. To update my recommendation of Peloton stock, whether or not I still think it's a buy, I would say yes, the company is still a buy, even after this 36% price increase. The company is now on a sustainable footing, and it can continue to use its cash flow to pay down debt, reduce interest expense, refinance debt further, which will reduce interest expense further, improve profitability, and they have several quarters where they can continue improving the business fundamentals just by simple financial prudency and lowering costs, paying down debt, reducing interest. If you liked the video you just saw and you want to see more just like it, please subscribe to the channel. I can't keep this channel free without the support of viewers like you. And if you're already subscribed, thank you, and I appreciate your support.